Hello, welcome to McBoss Capital channel. My name is Michael Chu. Today we just want to have a brief about what happened to the stock market if Russia invades Ukraine. Today is currently February 20th, at around 9 p.m. here in Mountain Time, North America. Quick disclaimer, all materials shown here are for informational purpose only. They are not investment recommendations. As usual, we focus on sharpening our skills. Today we're going to talk about the general market direction. So we're just going to talk about Russia-Ukraine crisis and some historical precedents when Russia invaded Crimea. We're going to look at current market conditions and what happened since we touched base 3 weeks ago, and what to look for in coming weeks, and what are the current sector's performance. So right now is February 20th, Sunday at 9:30 p.m. Mountain Time, and we are seeing the Dow future on the green. Tomorrow the US market is closed. We're also seeing the oil price up a little bit to 91. We're seeing this news. It was read earlier in the futures, but now Biden agrees to meet with Putin. Again, assuming Russia is not going to invade Ukraine anytime soon. So the last time we had something similar was February 20th, 2014. This was when the Russia invaded Crimea. So here's the S&P500 in 2014. So we're going to go look at February 20th, and we see that Russia invaded Crimea on that day. And it lasted about a month, which roughly around there. So we didn't see too much effect on the US market back then. Possibly it could impact the European markets, but I haven't checked into that. But anyhow, for the US market, there is not much impact back then. Here we look at United States Oil Fund, which is kind of represent the oil price. And here we have February 20th, again, that's when Russia invaded Crimea. And notice that it actually, came from a uptrend, and a pretty strong uptrend here. And then it really didn't do much the next week. And then it did hit a new high here, and then it came back down. So again, there's not too much impact on the oil price in terms of like if it will go further, right? So this is also interesting to note. Of course, with all this being said, back then Crimea was a really small part of Ukraine that they invade. This time they actually invade Ukraine, which is much bigger. So perhaps there is going to be a bigger impact on oil price, and also the European countries may have more impact too. So here we also want to follow another macro story, which I'm sure will come back to the market and become a hot topic, which is whether the Federal Reserve will raise interest rates to what degree. We can see here on the CME futures on March 16 is the next meeting, and right now the odds of raising from 0 to 25 basis point. Now in March they may raise it to 25.50 is a pretty high odds. So that's actually better than a week ago, where I saw it was actually expecting 50 basis point hike in March. So that might have changed recently. So that may be a good thing, because maybe the Fed won't be too aggressive. We look into May, we see that it went from 25 now to 50 basis point, and June there's a 52% chance now, and another hike here. So that's 3 hikes as far as we see so far. And then to 100, that's 4. In September to 125, that's 5. November. So right now in November, you can see it remains more likely to stay the same at 125. December, it jumps to 150, so that's another hike there. So that's 6 hikes so far. So that's 6 hikes this year. So then February next year may have, right now it's still unlikely to raise more than 150. So we're talking about in roughly 1 year, we are expecting roughly between 150 to 175 basis points. So it's quite significant, and the question is whether the economy can withstand this interest rate hike, and obviously what's going to happen to inflation. Those are the big questions moving forward. But with so much, this is kind of pricing in all these rate hikes in such a short time, like 1 year time frame. The market is expecting this to happen, and the question is what will be the outcome of raising this interest rates. Next, we're going to go to www.macbosscapital.com. We're going to look at this article, a weekly article. The stock market conditions are currently deteriorating. All the major index suffer losses this week. So you can see they're down more than 1% on Nasdaq, S&P, Dow Jones, and Russell 2000. Obviously we are seeing the market reacting to the Russia-Ukraine crisis right now. The indices are now all falling further below its 10 days moving average, which is not a really good sign. And so it may be getting close to test the Nasdaq on the January 24 low. That's the low, of the market, and we are not that far away. We are, that was 13,000 roughly, and here we are 13,500. So we are pretty getting closer and closer to this low, and we may test it depending, how the market react to the Russia-Ukraine news and what's going to happen there. Overall, the stock market breadth is really weak right now. You can see it on the stock basis. The accumulation are 167 stocks versus 341 distribution for the week, based on the ones we monitor. So that's almost a 1 to 2.5 kind of ratio. And you can see there's also way more industry groups that those stocks belong to that are being distributed. So not a very good sign, but there is some small pockets of strength here, which again, not many, but the telecommunications and communications equipment stocks are doing well right now. Packaging foods are doing okay. Travel related business service like booking and Expedia and so forth. We see some consumer durable in the auto market that's doing well. We've seen aluminum related stocks doing well. And this one we kind of chatted about before, this transportation in the shipping area, they're doing really well. Precious metals has also done well in the last week. Notice the oil and gas, we're not seeing much accumulation in different industry groups here, so that's also very interesting. But they obviously, we'll see in a second, they're actually, energy industry is the best performer this year so far. And then we have finance, Upstart, a pretty big growth name, did really well on the earnings report. And then, we're seeing lots of industry groups being distributed as well. So, so that's that. So we'll take a look at the stock market index. So this downtrend right here in January was very strong right here. And last time we, were doing a video was on January 28 right here. And at that time, we noticed that the market, had formed this January 24 big reversal update, and then it came back down and tried to test possibly the lows here. But then on the Friday, it actually closed really strong, right? So it came close to it, but it never actually did test it. So here's the test right here, and then it bounced pretty strong and closed at the top of the at the end of the day, and then it actually bounced the following week after, and then it actually, and then after that it came back down slightly. So it went above the 10-day, the green line right here, the 10-day moving average, and then it's been struggling, and then even tried to go above 21-day right here, the pink line. But you can see this 21-day line is like, sloping downward right now. And the green line, which is the 10-day moving average, it was kind of trying to go up a little bit, but then it now is going down. You can see the green line is kind of sloping this way. So so that's not good, because it means that the market, it tried once here, it tried 2 times here, it failed, right? So last time we were saying, hey, we're hoping that it could bounce all the way to this black line here, the 200-day, but it never did. It never even came close to it. So that's that's a sign, that's a strong sign of weakness right there, right? It didn't come close to 200-day moving average. It's way below this 50-day, and now we have this 50-day crossing the 200-day right here. That's also another negative sign. So because what could happen is this 50-day could continue to slope downward, 21-day could continue to slope downward, and 10-day could continue to slope downward. And and now what we want to see now, it's been almost 3 weeks since this bounce here. We have a small rally right here, and some stocks did rally, right? But now a lot of them have given back their gains in this last week. So and a lot of the news, the market was reacting to the Ukraine crisis news around this time frame. So obviously we can see that this is looking really bad. We have 3 down days, 1 up day, and then 2 down days. No, 3 down days. So that's out of 7 days, we have only 1 up day. So that's a pretty brutal stats right there. And we can see this trend channel also forming, right? This downward channel. So what we're gonna see is, most likely we might see a bounce here, right? And then, but because of this slope, it might find, it's just gonna be bouncing back and forth. If it does cross this channel line here, then we might see a better chance that that the market may have found its footing. But right now, I mean, the chance of it falling here sharply is pretty high. But although I don't anticipate as big of a drop like right here, but it might be a 1 or 2 day drop here. Maybe it could be sparked by the Ukraine crisis, I'm not sure. But there's a high chance, right, that could happen. Especially right now we're seeing, lots of weakness right now. But I'm also seeing, signs of exhaustion in terms of selling, because, like I said, we're seeing 6 down days in the last 7 days. And if we were to have, if the market was so weak, it would have probably undercut this by now. But it didn't, right? We still, we're sitting right here right now. So my take is that, there's lots of selling here, but it didn't make, it didn't make much progress, is what I'm trying to say. It could have easily dropped, and passed this lows here, but it didn't. So to me, this is a sign of, selling exhaustion here. So I'm hopeful that, there is some potential, but the trend line, as I said, the channel here, where you draw the lows, a line across the lows, and you draw a line across the highs here, it's a pretty steep channel line, right? Channel here. So, if it does, like I say, if it does fall, it will fall pretty hard. And like I say, I expect 1 or 2 days kind of, like that. And then, we might see a bounce. So that's something I'm gonna watch for. It is also potential, the best case scenario is that right now it could just bounce from here and then find resistance when the 50-day come down, right? Because now the 50-day is coming down, so at some point it's going to meet the 50-day. So this is for the next test if the market were to rebound. With the S&P, we are seeing similar tests right here. It tries to go above the 50-day or near the 50-day. It just couldn't. and then same thing here. It never even came close, right? It never even touched the line. And now again we are seeing some, it's trying to come to this low here. So but we have already, like I said, we have already seen so much selling in the last 7 days. It's either gonna break hard for 1 or 2 days and then bounce. That's my guess, or it's just gonna bounce from here. So that's my expectation in the next week or two, that one of those two scenarios will happen. And it really depends on what's going to happen with the Ukraine and Russia crisis here. Dow Jones also did similar thing, except the second time it actually went higher. So if you were to buy into here now, you'd be probably down quite a bit because of this trend here. One little divergence that I'm noticing is the Russell 2000, which represent the small cap stocks. Notice how it did climb back above the 10, the green line, and the 21, the pink line here, and it even come close to the 50-day, not too far away. But notice how tight this is trading, right? Compared to the other 3 major indices we just saw, this one is trading much tighter, and it's also way above the previous low here, right? Compared to the other indices. Now, when considering this was the first index that fall apart like really fast, back in, starting November, late November to December, right? So, so considering that this was the weakest index, and now we are seeing such, tightness around this chart pattern, which is really a good sign for possibly smaller cap stocks coming up, and also the trend is actually doesn't look too bad, because it fell, when you draw a trend line here, it fell this trend line. It did go below it, but like I said, it looks much better than, say, if we go back to NASDAQ here, if you draw a trend line here, this is where it broke right here, and look how far it is below that trend line versus Russell. As we saw in last video, we saw, on January 30th, we saw the energy was still leading, and right now, we are February 18 now, and we continue to see the energy turn out a 22% gain so far this year, and it pretty much beat not only did it do well, there wasn't any sector that came close to this performance. We see that financial is about 0.4% positive for this year. Pretty much every other sector is down for this year based on the select by the sectors here. I'm going to take a look at the Telecom-Fiber optics group. Right here you can see this group is forming a nice bottom, and it has a nice higher lows, right? And it's continued to trend upwards, and it's also forming a higher highs. So this is a really good sign that this potential group has already formed a bottom, and now we can see the moving averages starting to turn up. So that's something to watch. We have CIEN Corporation here, again similar pattern. We have LITE here, momentum, right? So this is a nice V-shaped base here. We also have Infineria, so same thing, base here, and we have VIAV solutions. So this one is actually a nice cup with handle pattern. So this group seems to be doing really, doing good right now. Here's the food package group in the consumer staples area. We noticed we saw a nice uptrend, and then it fall back down to form this base here. It's a nice round bottom right here, so that's a good sign, and it's starting to trend upward. If you look at some of the stocks like Kellogg's, you can see it's forming a base now, and it's coming back up, right? We'll look at Campbell Soup, similar, we can go down, now it's coming back up, right? We look at JM Smucker, same thing, it's coming back up here. Next, we're going to look at a consumer discretionary group in the leisure travel booking. notice how this chart pattern right now is, it has formed a base and it's starting to come back up right now. So pretty strong uptrend right now. We look at the top market cap stock ABNB. Build this base, now is going up, pretty strong uptrend right now. It's probably related to probably the peak of the COVID Omicron. So the stock is finally moving in the right direction. We can also look at booking. This one is actually breaking out to new high recently. That's a very strong sign. Looks like this pattern also looks really good. So that's really good. Expedia. Oh, this one is even better. You can see it broke to new high already, and it has a really nice gain, 13% from this pivot right here. So yeah, very good group to. Looks like the travel booking group is doing really well now as the economy are reopening in the US. So this one is trip.com. There's also SABR Corporation. This one also doing well. You can see a big jump right here with earnings. Looks like the earnings are doing better than people expected. Next, we're going to look at the industrial transportation shipping group. Look at how nice this uptrend currently is. It's really nice. It's the market obviously hasn't done well since January, and look at this group. It's just there's a pullback here, but other than that, during this uptrend, it continued to power higher, and it is potential for another pullback here. So something to watch out for. Some of the stocks, Zim Integrated, the largest market cap, it's already have a nice gain since this pivot right here. MATX here, Matson. This one looks a little bit ugly, has an ugly pullback, big bounce on earnings right here. So you can see the big earnings growth, 379%. KEX, also, it's a really long base here, but you can see it's trying to break out right now. So it may, and then it might have a nice uptrend here. Starbulk, this one really nice uptrend. You can see it's sticking to the 10-day line, like right to the dot here. It's really nice. So as long as you can, right now it's a little bit extended. It's 27% gain. Google, Golden Ocean, also very nice uptrend. DAC, Danos. So this one, it's pulling back a little bit. So there's slight volume here. It didn't close at the bottom, so that's a good sign. Hope for a rebound right here, and that may be a potential, to get into there. Here's the commodities group: mining, gold, silver, and gems group. I find that this industry group is very volatile. Not sure, it's definitely not meant for long-term trade. Even the short-term trade, it can be dangerous. We might see another pullback here. But right now, we coming test this 200-day, and last time it fell. So looks like it's starting to, seeing resistance as well right here. So it's hard to say whether it will break through and go up here. But let's look at the stocks here. We have Newmont Mining. You can see this nice big base. So this is a very productive chart because it actually looked different than the group chart, and of course it's still very volatile, but the overall trend is going upward right here, right? So but it's still very volatile, so you can expect pullback along to this trend line somewhere around here. Barrick Gold, wow, this one is moving up pretty strong on the right side here. So Franco Nevada, here's another one. you know, and nickel eagle starting to move up. So here's the 200-day moving average. What's for potential resistance here? Gold fuels. This is also, you know, broke out of this nice pivot point. It's now moving uptrend pretty nicely. Angle gold. This is a nice flat base. It's looking pretty good. If it breaks out, then that's good right there. Kinross. This one looks a little bit weaker than the others. And Royal Gold. This one also moving up pretty strong right now. So I just want to touch on one stock this week that have good earnings came out. This is Upstart Holdings, symbol UPST. It is a cloud-based AI lending platform, and they work with consumers and lenders to enable effortless credit. So what happened, you know, during this downturn? You know, most growth stocks suffer a big correction. This one's no exception. In fact, this one corrected probably from here to top here in I believe that's around oh wow, it actually top around October, mid-October, and last year, right? So it corrected roughly 80%, which is a very significant correction. Of course, it has a huge run right here. You can see from when it IPO to, you know, from like in the mid-20s to like, you know, over 400. That's a 20-time return from when it, you know, IPO at $20. That is significant gains in a very short time frame. It all happened within last year or so. You know, IPO late December 2020. But then it has this, you know, 80% correction. Now it's starting to climb back up, right? But what I want to talk about is the earnings that came out. So when the earnings came out here on February 16, I guess it you know, closed, probably report after hours, and then the next day it jumped 35% from here to, you know, this level to this level here. So that's a very significant jump, but the reason why it jumped so much is because it report very good earnings, right? So it report 89 cents per share earnings for that quarter, ending December 21, which is the highest earnings since the beginning, and also the revenue is almost triple, 252% higher than a year the same quarter ago. Right, when it was only at $86 million, and now it's $304 million. So those are impressive, you know, performance from this company. The other thing we're seeing is we're seeing huge accumulation by institutions here. There's now 522 institutions owning this stock, right? And it is quite unique in terms of they're using AI, artificial intelligence, to help them figure out who to lend to. I listened to the conference call, and you know, they used to do personal loans. They're now doing auto loans, and they have plans to go into the mortgage area in 2023. So you know, I can see how because they're already doing loans at personal level and now doing auto loans, so the loans are basically increasing in value that they're doing, and that could definitely you know, increase their returns even bigger over time as they get into mortgage. So I really see a huge potential for this company, assuming they can execute well and continue doing what they do well. But just want to highlight this stock. One of the things that I was looking at is, you know, the PE ratio before the earnings was actually around 72 to 75, depending how accurate your numbers are. And now after the earnings, it actually dropped because, you know, when you have price over earnings, the earnings actually came in much higher than most people expected. That's why we had a 35% jump that day. And it lowers the PE ratio now to 60. And, you know, looking at 2022, it doesn't look like there's much increase right now. I'm not sure if this number is is up to date, but you know, but we are seeing strong growth moving forward. You know, even 2023, we can see it's going to jump by 34%. Again, I'm not sure if these numbers have been updated based on the recent new guidance. So I'll be watching these numbers. So looking at the daily chart right now, you can see, you know, it has this 1 day big jump right here, and you know, it's starting to fall back, right, to now the 50-day, you know, and we want to see support here, because that's a very key area where institutions will come in to buy. So we want to see in coming days or week that it will bounce off this 50-day and move up. Then that means the uptrend will continue, right? So so that's something to watch for in the coming week. If you like this video, subscribe to this YouTube channel. If you haven't already, give us a thumbs up. You can contact us at this email at anytime, support@macbosscapital.com, and we can help you on any of the services here. Thank you.